Vincent, Shire, the London-listed pharmaceutical company, it's a rather specialised beast, but its shares have been doing terribly well. And this morning it announced a quite large deal, I think. What's it all about?
Well, yes, Shire is what's known as a rare diseases and specialty pharmaceutical company. So it's a highly specialised company involved in very few sort of therapeutic areas. And the share price has been an absolute tear this year. It's up 50%. I think primarily because a new CEO has come in and is taking a fresh look at the company, and there's an aggressive cost drive, and there's lots of things going on. But this morning it also announced a massive acquisition, $4.2 billion it's paying for a company called ViroPharma, which makes a drug to treat a particular disease, and it's buying that, and it's kind of complementary with an existing drug that Shire has. So it looks to be building up the rare diseases business in a very substantial way.
And it's obviously quite a lot of money in round terms. Is it overpaying, underpaying? Does it look like it's got a good deal?
Well, I think that the question that these kinds of pharma companies have to ask themselves is, what price growth? And I think the answer in most cases is, well, any price actually.
Yeah.
So I think that's what we have here. I mean, it's buying ViroPharma at a multiple of 9 times ViroPharma's forecast. Actually, it's 9 times its forecast 2013 earnings, which is very high. At the same time, it's locking in growth because the drug that ViroPharma specialises in, that Shire really wants, which is called Cinryze, is growing very fast, but it has a very limited patient pool. I mean, these are rare diseases. They're not called rare diseases for nothing. They affect very few people, and drug companies can't command very high prices for the drugs. But at the same time, the market is quite limited. So I think that it's all about balancing growth and what you're paying for it, and it's going to take a while for us to sort of really see whether this is value for money for Shire shareholders.
Well, Shire shares were up a little. Can it finance this quite easily?
It can actually, yes. It's very underleveraged, and I think ultimately the leverage will only go up to about 1.5 times EBITDA. So yes, it can. It is a very strong balance sheet.
Well, it's an interesting deal, and it will be interesting to see if it pays off. Thanks, Vincent.